Hello folks, this is Raj Sastry from Raj Option Trading. Today is March 28, 2021. I want to quickly recap stock market activities last week and take it from there. So from a trend perspective, the real estate and home builders are up, mainly because inflation is under control. Fed also made a statement around it. With inflation under control, probably Fed is not going to raise the interest rates soon. So that's why the real estate, the home builders are going up. Witnessed by Toll Brothers, Leonard, DHI, and Pulte Homes. And next we have consumer staple stocks. These are also up. We have Coca-Cola, Procter and Gamble, Walmart. And semiconductor stocks are up mainly because there's a shortage in semiconductor. That's why all these names like Applied Material, KLA Lam Research, these are all up mainly due to the shortage. And there is also a big news that Intel is going to create develop a new chip facility. So I think it's a good news there. Eventually, I'm hoping this semiconductor shortage will really go away. Infra stocks are up mainly because President Biden talked about he has plans around infrastructure. With this, the main beneficiaries are really Nucor, which is a steel stock, Martin Marietta, which is materials, VMC, same story. This is also Vulcan Materials, and US Concrete and few others. Energy stocks are up. Finally, people are getting COVID shots, and with that, economy might open and recover. So with that, folks have to drive. So that's why energy stocks are up. Chevron, ExxonMobil, as an example. Utility stocks are up mainly because because Fed said interest rates are going to be might stay a little bit relatively low because we have inflation is under control. That's why these utility stocks are up because if the interest rate goes up, folks will flee away from utility stocks into actually bonds and here and treasuries because inflation is going to be under control and interest rates are going to be tepid for a while. That's why utility stocks are up. They've been down for a while. Turkey stocks are down and Bitcoin stocks are down. Mainly you can witness it by Canon, Riot, Silvergate, and a couple others. Internet stocks are in China are down. As you can see here, we have IQ, Tencent, Baidu, Webshop, Baba, Baozun. All these are down because I think Chinese government want to make sure these companies don't abuse users' data, and they want to have some central regulation around the user data. Healthcare and biotech stocks are down. At least a few of them are down, like Teledoc, Exact Sciences, Novavax, Fate. And travel stocks are generally down, witnessed by Trip, Sabre, Expedia, Booking. Probably they've gone so much so far, so that could be the reason. And EV electric vehicle stocks are down. We got GreenPower, Tesla, NIO, the QuantumScape. Some of these are down because there is a chip shortage. There is a lot of these semiconductor chips go into these cars. That's why NIO closed the shop for a week or so. Online education stocks are down. We got GSX, TAL, and EDU. And technology stocks are down, mainly Amazon, Netflix, Google, Snap, Roku, and MongoDB. I'm sure some of these are due to the rotation. Probably they will come up as we go forward eventually. Then we got fintech stocks. Most of these fintech names are down, like PayPal, TIGR, which is in China, QFIN, and Yalla. So this is a quick recap on what's trending in last week. So you got a good idea. And what we'll also do is we'll quickly look at some of these ETFs that will give us a good idea on what's trending and take it from there. Before we go into ETFs, let's look at broader market and see how is broader market doing. For that, we'll use a thinkorswim chart. This is a 3-month, 1-day chart. First, let's look at S&P 500, which is a ES future. And if you look at S&P 500, I think Thursday and Friday they kind of recovered. And before that, the 3 days, especially Tuesday and Wednesday, stocks were down. Especially because of the worries around all these interest rates and whatnot. And then we got Dow Jones Industrial Average, same pattern here. Last 2 days, it did very well. Especially Friday, stocks did very well, mainly because inflation is under control, which means Feds will not increase the rates, which is a good sign for stock market. NQ, which is Nasdaq. Nasdaq is a little bit weaker, as you can see here, because all these tech stocks have ran up so much, and they're taking a breather. But regardless, tech stocks also rallied on Friday, mainly because there is Feds may not increase the rates, so that's why it's a good news for you and technology. Russell, same story. It did very well on Thursday and Friday. And bonds, as you can see here, bonds rallied, first 3 days of the week. Then, afterwards, they kind of, on Thursday, it fell down a little bit. Mainly because, the inflation itself is under control. And ZN, which is, again, this also came down a little bit, again, bond. And on the energy side, as you can see here, energy is kind of flatlining. I would not call it going up or down, kind of flatline, I would think. And same story with gold and dollar. It went up a little bit, but now it's a little bit down on Friday. So it's kind of in the trading range, I would think. It's trying to gain some traction and momentum. But on Friday, I think it came down a little bit, given an inflation is going to be lower. So with that, let's jump into one more chart here to look at the broader ETF or exchange traded fund. We will not cover this in too much detail because it will follow similar trend that we talked about earlier, mainly as all the stock indexes, stock ETFs, they're all doing pretty well. As you can see here, when it comes to bond, it's a little bit weaker on Thursday, and Friday it's kind of little stronger but not too much. Gold is same story, trading pattern. I think we covered these a little bit. I will hit on one or two things here. XLI industrials are getting nice strength here, which is a good story. And also XLE, which is energy, is also picking up, and utilities are doing well because of the interest rate. It might stay lower, which means people will not flee away from XLU and buy treasuries. So with that, let's go into little more details and look at a 5-year 1-day chart here, which gives very good indicators for folks to understand where we are headed. So as you can see here, we got S&P 500 futures here. You can also substitute this with the SPY, which is a similar story. We have SKEW, which is a very good indicator to see where is stock market headed in coming weeks and months. And then we got VIX, which is a volatility index. That will tell us, how is volatility doing, which is a very good indicator to see how stock market will behave in the future. I want to draw your attention to a couple points here. One is back here in 2019. So 2019, somewhere here, SKEW hit a high of 159 way before stock market crashed because our J. Powell, he increased the interest rate. So basically the SKEW gave a heads up way earlier than Feds raised the interest rate. So I think we have to take a cue from that. And then if you look at our COVID scare back in March time frame, way before that, if you see here, SKEW hit high here, sometimes over here, sometimes in February March time frame. So because skew was high, we had some heads up. We could have anticipated a sell-off. Anytime VIX hits around 140, 145, we got to be watching out for any crashes. Now we are here in March and end of March, and skew is hitting 145. For me, skew hitting 145, we have to be very careful here, because the moment it's crossing 140 and 145, that's clear danger signal for stock market. I think we have to be very careful here. I would not be buying stocks outright all the time. I would be looking for at least beaten down stocks, and also use some hedging strategies like buying some VIX itself, or even you could buy some TLT or some gold as a hedge. So I will be watching this VIX very carefully. I want to make sure we don't get blindsided by VIX. With skew. Next is VIX. VIX, as you can see here, it's in a trading range for a long time. So any time VIX kind of goes into trading range in the lower range for a long time, you could anticipate some explosion. That's something normally happens at times, especially with the higher skew. As an example here, back in 2019, VIX was in a trading range for a long time, but in the meantime, skew, started rallying a little bit. Finally, we had this, explosion in VIX and stock market crash. Same story over here. We had, this huge crash in 1919. VIX did nothing for a long time, kind of, straight line or a trading range. But in the same meantime, as you can see here, skew kind of went up and up and up. So you got to look at the divergence between the VIX, which is going up, and skew, which is going up, and VIX staying flat. You could be careful in those scenarios and anticipate some explosive movements. So with that, let's go into one more chart here. And here this talks about the bond itself, the 30-year bonds here, ZB, and TNX, which is interest rate itself, 10-year interest rate, and dollar. So what I typically watch out for is how is bond doing. As example here, bond is kind of falling off. In between, bond went up because there was a folks thought Fed will raise the interest rate, so that's why bond went up a little bit. But then, as you can see here, bond kind of after inflation news that inflation is under control, I think bond kind of went down here. And the TNX itself, TNX 10-year treasury, the yield itself, interest rate, 10-year interest rate, it will trade in opposite direction to bond. So as bond is coming down, as you can see here, the interest rate itself went up, which is a little bit okay type story. Even with the with Fed saying interest rates will be lower, at least for now, with the inflation under check. And nothing major in the DXY, the dollar index. It's kind of trading in the sidelines for most part. I would not worry too much about dollar itself. So with that, let's look at ETF winners. ETFs will give us a good indicator on how is the broader market moving. So with that, let's look at some of these. We will not go into detail. It's an ice chart. I'll quickly hit on a couple high points here and take it from there. So as you can see here, the home construction and real estate is typically doing well, mainly because interest rates might stay low with the inflation under control. And as you go through this, we got some of these REIT REITs, same story, going up a little bit. And as you go down here, you can see infrastructure is also going up. Basically because if Biden approves some infrastructure budget, many of these infrastructure plays will do well. And semiconductors, as we talked about, there is a shortage. These stocks are going up. So that's the high level ETF winners, some trend we can glean from this. Next, let's look at ETF losers. From a loser perspective, we talked about Turkey and all these Bitcoin. They're also down, as we talked about. And China itself, Internet China is down mainly because of this China trying to control the user data and having some regulatory authority around it. Then we got cannabis is down. Many of these cannabis ETFs are down. Then we got biotech also a little bit down, and genomic also around the human genome a little bit down. Some of these travel stocks are also down. So with that, it gives us the indicator on how things are going. And what I will also watch out is really, as you look at the weekly, performance here, many of these are down. I would also watch out how are they doing, on a yearly basis. If they're up too much on a yearly basis, I think there is a chance that these can go lower a little more. But if they are not doing well on a they're not too high on the yearly basis, then you could expect them to go recover pretty soon. So with that, let's go into some of these small cap weekly winners. It's an eye chart. I will have you look at this in leisure, but I will touch on a few things that I think might recover, and I will also call out. You got to watch out for valuation as usual. I kind of highlighted some of these high valuation stocks. For example, here we got um, Ta Kung, which is an art company in Hong Kong, did very well. Last monthly, quarterly basis, high valuation, and same story on this Prothena Corp, high valuation, price to sales ratio, something to watch out for. I would also watch out for some of these high float or short here. We got MagnaChip, again a little bit higher float short ratio, and we got one more here, high short ratio, and one more. So I would be watching this a little bit, but in general, I think I might buy a little bit, MX, which is a MagnaChip, and Funko, which is again a toy, makes toys and for the kids. These two seem to be pretty well, mainly because the as you can see here, RSI itself is it's not too low but manageable. But they've done good from a quarterly. They've done very well from a quarter over quarter sales perspective, 15% up here with the MagnaChip. It's a lower price stock, and also this one here, Funko, 6% quarter over quarter sales and good gross margin. I also like other companies. We don't have too much time to run into all the companies. That's why at the high level I highlighted two of these companies. Next, let's look at small cap weekly losers. So the way this chart is organized is really we got all these stocks here and performance, weekly performance. As you can see here, the top row here, this stock lost a lot last week, and it's in the descending order. So first one is frequency therapeutics. So frequency therapeutics, it went down so much, as you can see, 74%, mainly because they have a hearing, they're into curing the hearing loss, and their experimentation did not do very well, their clinical test, and because of that, the there is a regulatory setback. That's why stock came down. I will be a contrarian here because stock has come down so much. I'm willing to buy a little bit, so that way we can take advantage of any bounce back. And this company did not give up on their test. They're going to be progressing again, and taking the test forward. Next is Bolt Therapeutics. It's a came down so much, as you can see here, 29% down. Good, insiders are buying, as you can see here, 66% insider transactions, and quarter over quarter sales is negative, and also high PS ratio. So I would be buying a little bit, mainly because insiders are buying it. So I'll buy a little bit and look for any bounce and take it from there. Next is GreenPower. GreenPower is a Canada-based company. It's into EV, electric vehicles. Low stock price, as you can see here. Yeah, they've got okay. It's a little bit quarter over quarter sales is negative, and they also have RSI, which is low. That tells me right now it's oversold right now. It could be good to buy some. And these guys also have got some contracts for their technology and their vehicles, so which is a good story. Next, let's look into the weekly winners. Same story here. It's organized by weekly performance. The one on top did very well on a weekly basis. And I would be looking at PubMatic here, which is into online advertising, digital advertising, and stock has done badly in a month's time, as you can see here. But overall, they got a good quarter over quarter sales and good gross margin, and it's there is a little bit high short ratio, as you can see here. I'm thinking buy now because stock has come down so much. Some of these shorts have exited their position, so I'm willing to buy some and go from there. Next to our Toll Brothers and Advanced Energy, same story here. So from a RSI perspective, a little bit lower, and they have done very well on a weekly, monthly, quarterly basis. And as you can see here, Toll Brothers is almost at 52-week high. There's just 1% down from 52-week high, but with the interest rate probably being down a little bit, this stock can do relatively well. And both of them have got very good quarter over quarter sales and good gross margin. Next, we'll look at the mid cap weekly losers. From a loser perspective, there are a bunch of these stocks, as you can see here. First is Fintech, based in China. These guys have lost 30% over last 1 week. I think these guys are into brokerage, and buying and selling stocks. It's a brokerage platform. I think this can bounce back from this levels, and they got, as you can see here, from a float perspective, not too bad. There is not too much short. PS is also okay. They got good gross margin and quarter over quarter sales. AMC is a recovery play. As you can see here, this is into squeeze, people short squeeze type scenario here. Stock came down 26% in last week's time. I think it's good to buy some with the anticipation of recovery and market opening. It still has got some short ratio, as you can see here, 21%, which is relatively high. Next one is MP Materials. This company has come down a lot, as you can see here, 23%. It's a good company. These guys are really doing pretty well. I think they took over one of the older plant from one of these big automakers, and now they're trying to really do very well. So with stock coming down so much, 23%, I would be willing to buy a little bit into this stock and take it from there. So next is Silvergate. Silvergate is into it's a bank. It also carries a lot of Bitcoin assets, and as you can see, you're down 22%. And it's insiders are selling it. I would be contrarian. I'll be looking for a good entry position and buying some. As you can see, your RSI, relative strength index, is lower. That tells me stock itself is oversold at this point. Next is 360 DigiTech, QFIN, which is based in China. Stock has lost so much in a week's time. I think China's fintech market might be a good story going forward. I'm willing to buy some and hold the stock for a while. And I think it's got a good quarter over quarter sales and gross margin. And as you can see here, some of these Bitcoin stocks are down. I will be waiting to buy some as it goes down and hold it for a while. The next is the large cap winners. We'll just skim through a couple of these. We'll not spend too much time. It's an eye chart. You can look at this in detail. With the semiconductor shortage, I'm willing to buy a little bit into KLA Tencor and Lam Research. These are, and even United Micro, because these folks will ramp up their production, and prices are also high with the shortage. These guys can take advantage of semiconductor shortage, and also applied material too in the same category. And ZoomInfo, this stock, I think off late, this, everybody thought this will do very well, but it has not done great. But I think now it's kind of it's getting its mojo back. I would be, willing to buy a little bit and take it from there. Next, we'll jump into large cap weekly losers. So we got a bunch of these stocks here. I will not go into detail. As you can see here, GSX, it's a online education, or in China, stock has gone down so much. I think these guys had a large block order to sell the stock. So that's why because it's a large block order, the stock itself took a big hit. So I would be willing to be a contrarian here and buy some as it goes down. It has a large short ratio. I would be willing to buy some as a contrarian and take it from there. Next is the Tencent, Whip Shop. These two are really coming down so much, as you can see here, 31%, mainly because of China's crackdown into the user data protection and privacy. So I'm sure this will bounce as we go forward. They might fall a little bit, but I think they will surely bounce back. Given the low RSI, the stock is clearly oversold at this point. NIO, we talked about this. Very good company. Stock price has fallen down so much, $36 now. It used to be $50, $60 earlier. I'd be willing to buy a little bit. I'm hoping this shortage in the semiconductor will be, behind us as we go forward. Farfetch, this is into luxury, retail and apparel. I think stock has fallen down so much. I'm willing to buy some and take it from there. I'm looking for a bounce at this point because it's sold off so badly. And then we got some of these stocks here: Future Holdings, MongoDB, NovoCure, KE Holdings. Same story here. Relatively oversold type stocks. Future Holding has a high short ratio, as you can see here. I'd be willing to buy some and take it from there. Roku, same story here. Stocks sold off with this recovery in horizon. People are hoping, hey, people may not advertise too much, may not watch TV too much. So that's why Roku is kind of selling off. Good to buy a little bit on a weakness or a pullback and take it from there. Next, let's look at mega cap winners. From a mega cap perspective, Visa, MasterCard, I think these two are a little bit down, especially Visa with some of the investigations going on. I'm willing to buy these, because the RSI itself is relatively low. I think it's good to, buy a little bit and take it from there. And Taiwan Semi, same story here, semiconductor shortage. These guys will be beneficiaries of higher semiconductor price. Walmart, I think these guys probably will go up now on because they had a huge short ratio. Stock has come down so much in the past. Now on a weekly basis, they're getting the groove back. That tells me probably these guys have bottomed out, and now they will start to go up. Now let's look at the mega cap winners. These are the mega cap losers. These are the mega cap stocks which have lost on a weekly basis. So the ones in bold are my favorites. As you can see here, Alibaba, Nike, Walt Disney, Nvidia. Mainly I will be looking at the RSI, relatively lower, and also there is insiders. In some of these, insiders are selling right now, as you can see here. I would be a little bit contrarian here and open a position because the stocks are down and take it from there. Even Tesla, for that matter, it's down for the week. So if Tesla falls below 600, I'll be opening a position a little bit and take it from there. So with that, from a summary perspective, we looked at a lot of stocks. We looked at the small cap winners losers, mid cap, large cap, mega cap. From a summary perspective, these are the ones I'm willing to buy a little bit and hold it for long term. Um, I will not go through this in detail. We talked through this. You can look at it in detail. Mainly, I look for the RSI itself that tells me that a good time to buy. With the I look for a little bit lower RSI, typically below 50 or below 60, 65. I also look for quarter over quarter sales growth and gross margin. Also look for are the insiders buying or selling, and I will kind of if the insiders are buying, as example in this company Bolt, I may be willing to buy with along with them. So these are some of the things I look for in the companies. With that, happy investing. Thank you very much. Have a great week ahead.